Today, I'm speaking to Seun Timi Koleolu, one of my best Nigerian connections. Now, Sean, there's so much talk about the new normal, and lots of ideas and opinions are going around. I think that one of the side effects of this crisis is that it's making people look into African markets from different perspectives. I mean, I hear there's some exciting opportunities in Nigeria, way outside the scope of oil and gas. They're becoming more evident with this crisis. I wanted to hear from you, what are the areas that you anticipate investors will consider as we get out of this crisis?
Thank you, Fabio. One thing I would say has come out of the pandemic is clarity as to certain sectors in the Nigerian economy that hold great growth potential and good investment opportunities. Some of these sectors were identified as essential sectors during the lockdown, and they continue to grow as the lockdown eases. These include the health sector, agriculture, food production, finance sector, particularly Fintech, logistics, and companies using technology to provide essential services. I would advise investors to consider these sectors. I would also advise investors to consider areas identified by the Nigerian government early this year as a focus areas for plans to diversify the economy. And these include manufacturing, technology, agriculture, and creative industry. So there's a bit of overlap there.
Right, well, that's quite a menu. I mean, a lot of options there, a lot of opportunities. Now, I've been reading some very interesting Pavestone reports that you've been putting out, and there seems to be a very solid framework for foreign companies to structure their investments and enter the Nigerian market. Could you give me some idea of what this framework is like?
Yes. There are various ways by which a foreign entity can enter into the Nigerian market. Firstly, they are allowed to own 100% shares in businesses in most sectors in the economy, including the sectors I highlighted earlier, so they could set up a business here. They can also invest in small and more mature businesses by taking up equity. A lot of our SMEs are looking to scale and require an inflow of capital. So they'll be glad to have these investments coming. Foreign investors could also consider contractual arrangements with local entities. They can choose to transfer technology and know-how for operations of this business in Nigeria and arrange a fee for this. There's a regulatory approval required there, but it's not hard to get.
I see. Right. I've also been hearing about some incentives and policies to try and attract more capital into the country. Are there any policies or incentives in particular that you think foreign investors should know?
Yes, there are a lot of incentives that have been put in place to encourage investment in Nigeria. For instance, we have sector-specific tax incentives. We have up to 5 years tax holiday in the agriculture sector, tax holiday in the mining sector of up to 5 years too. There's import duty waivers on mining equipment, medical equipment, pharmaceutical products. There's also a general pioneer status tax incentive for businesses who come into underdeveloped sectors. They will be entitled to 5 years tax holiday. And of recent, the medical and pharmaceutical sector has been included in view of what's happening right now, the COVID-19 pandemic.
Right, that sounds great. One of the things that I wanted to mention to you is I come across a lot of foreign investors, and be it in Europe or in the US, and a lot of the times Africa, it's a new territory to them, and they're anxious about coming into a new market, which is very natural. In terms of Nigeria, what would you say are the steps investors should observe to safely enter the market?
Okay, yes. There are definitely risks like any other market in entering the Nigerian market. But a good way to manage this risk is by engaging the right advisors from the onset. Advisors who have a good understanding of the regulatory terrain and how to properly protect the interest of investors. The investors should ensure a proper due diligence is carried out on potential business partners and proper research is carried out. You need to ensure that visits are also carried out at regulatory offices. This is because it's not enough to do a desktop audit in Nigeria for laws, applicable laws. You also need to visit the regulators to ensure you understand all the regulations that apply and to avoid surprises.
Well, that's a great tip. I mean, it's not very common that you actually get attention directly from the regulator. So thank you for that. Now, before I let you go, I know you mentioned fintech in the beginning, and I'm personally curious. I've been following some very interesting fintech developments all over Africa, and Nigeria, with the size of its economy, is certainly a key market for these opportunities. Of course, central banks have to be strict to make sure that things run very smooth. So I was wondering if there are any regulatory updates that you think is of particular importance that you could share with us in terms of fintech.
Yes, there is, Fabio, particularly with respect to the microfinance bank license. Now, it's important to understand that the microfinance bank license is the more popular license used by fintech companies operating in Nigeria. The attraction was because of the low capital requirements. However, in 2018, the central bank issued a circular increasing the capital requirement for microfinance banks substantially. We're talking 1,000% for the unit license increase. This obviously was of concern to fintech businesses and remains a concern for them. However, in 2019, there has been a slight variation to this requirement, recapitalization requirements. So the unit license has now been split into two licenses. There's one titled the Tier 1 unit license and the other titled the Tier 2 unit license. The Tier 1 unit license is focused on urban areas, whilst the Tier 2 unit license is for the provision of financial services in rural areas. The Tier 2 unit license is much more affordable. The capital requirement is much less than when it was just one capital requirement for the unit license. So that's a welcome development for the fintech space. The only concern that there is that the Tier 2 unit license is focused on the rural area. So there's a restriction on that. But I must say that there's a large unbanked population in the rural area. So there's great potential there. Another development is of recent. The deadline for capitalization was April 2020. In view of the COVID-19 pandemic, the central bank has extended the recapitalization deadline to April 2021. This gives the fintech and microfinance banks more time to source investments and also consider mergers and acquisitions. The last thing I'll say is there is a large unbanked population in Nigeria, and this is a great potential investment area for investors. I think they should consider this area.
Well, that's certainly really, really interesting. I mean, I think the government, the central bank attitude towards it splitting into two tiers certainly will facilitate a lot of development and financial inclusion. This is fantastic news. Well, Seun, thank you very much for your time. This was very enlightening, and I hope to talk to you again soon.
Thank you, Fabio.